Good afternoon, Options Trading Signals members and viewers. This is J.W. Jones coming at you with your weekend video analysis. I hope everyone had a safe and enjoyable weekend. I know I certainly did. Let's go ahead and jump into the charts here. It is 2:50 p.m. Eastern Time, Sunday, October 2nd, 2011. Let's go ahead and jump in here. We're looking at the S&P 500 E-mini futures daily chart, and I've kind of drawn in here. We had this giant bearish wedge that's developed, and we kind of have this some key support and resistance levels defined. Obviously, Friday's price action was just ugly, and we're kind of in a channel even there. And I'll go ahead and just draw it in here for everyone to see. But basically, here we are, right in this little channel. And we're coming into a clear support zone. There's going to be a lot of support around 1100, which we obviously already are aware. Every market pundit in the world is aware of that. But what I'm actually watching for is this 1075 level, which corresponds to the overnight lows dating back to August 9th, 2011 on the futures. This is a futures chart, not to be confused with the S&P index. Futures is slightly different and reflects the overnight session. So there is going to be additional support down here at this low, which is actually going to correspond with around 1077. So there's additional support. Even if the 1100 level breaks on the futures, there's going to be more at 1075. If 1075 if we were to test this support zone, it failed. We come all the way down to 1075, it fails. Next stop's 1040, around that area, and then below that around 1008 is where the next support level resides. So that's kind of where we're at now. We've clearly got this resistance level that's going to hold prices back. We're starting to get to the end of this wedge, and it's going to resolve one way or the other. What I would point out is, we're at the stage where this pattern is starting to mature, and the next move could be pretty drastic. We've been consolidating in this little trading zone, if you will, in the 12, basically the 1100 to 1230 range on the S&P 500 E-minis for the better part of almost 2 months. So this coiled, consolidated nature is going to make the next move significant, and it's going to happen quick and sharp. So we want to be careful that we're on the right side of that. Now, as members know, I don't try to game which direction we're going to see. I wait patiently for a breakout that's confirmed. I let others do the heavy lifting. I'm not going to chase this thing or try to game it. I'm just going to be looking for a clear breakdown, and at which point, if I get that, I will look at getting short, various ETFs and individual securities, as well as if we break out, we'll get long and lean long. So as it stands now, we're kind of in no man's land, getting close to support, and we're starting the fourth quarter begins on Monday, and we'll see what market participants have to say there about the overnight session, how the market handles the ugly price action on Friday. So let's go ahead and just take a look at the VIX. Here's the volatility index. Look at the daily chart. I've got this one just key support area lined out. I mean, we've had major buyers stepping in around this 32 price level every time. And this is that range. We see the clear range here that I was just discussing on the S&P 500. Similar range. We don't have huge volatility that we saw in the sell-off back on August 5th. Or August, let me see, I apologize. I got a little bit ahead of myself there. Back on August 8th, we haven't gotten near the volatility, which actually got up as high as on August 8th. We got as high as, let's see here, 45.42. So we've got it on Friday where we closed trading around just shy of 43. So we could easily go up another 4 or 5% from where we're at now just to get to the August 8th highs. But again, this clearly shows the recent consolidation. Wouldn't be shocked to see us continue to push higher here. Clear supports around 32, and we also have price action above the 20-period moving average, which is bullish for the VIX, meaning higher volatility levels. It is certainly bearish for stocks, at least at this point in time. This is not the kind of chart we want to see working higher. It's certainly bearish for equities if it continues to do so. As far as the usual suspects that I cover, and for those that are new, the usual suspects are 4 key indices that I monitor As a result, they all have major impacts with the S&P 500, the broad markets, and they give us a better idea of what is going on in the market and the underlying securities in various sectors of the market. And these are critical as far as relationships with the S&P 500 and the relative strength weightings of these sectors. So let's go ahead and look at the usual suspects. We'll start off with IWM, which is the Russell 2000 ETF, basically looking at small cap price action. Giant bearish wedge, very similar to the S&P 500. We've got support levels that we are within a whisker of on Friday's close. If these levels break down, if we see 63.50 break and we get two consecutive daily closes below that level, price action could be getting ugly very, very quickly. And we are, like I said, very similar to the S&P, getting to the end of this channel where or this chart pattern that goes all the way back to the beginning of August. And we're getting very close to getting this pattern to mature and to fulfill. Apologize for that. I've had a little bit of a cold here recently, so I'm dealing with a cough. But basically, this pattern is close to maturing. It's close to finally producing a large move in the direction, and I'll be watching closely to see how this trade transpires on IWM. Not to mention, we do have exposure at OTS. We do have a long-term butterfly position on IWM right now that is getting close to profitability as time continues to pass, and we profit from that passage. It is one of the current open trades that the service has, and at this point we're getting close to being flat there for the trade as a result. Let's take a look at the transports. IYT, Dow Jones Transports ETF, daily chart. And what we can see is similar price action. The only difference is IYT actually broke down below the August lows here back on September 22nd, came up, kissed the 20 period. Now we're back down. I'll be watching for a break of this 73 price level. But if the transports and the small caps break down and we see new lows, the S&P 500 will be it will struggle to hold up. It will struggle to push higher. And if you tack on the financials to that, if the financials and the transports can't rally, the S&P 500 will not rally for long, if at all. So keep that on your radar screen. XLF financials. Let's take a look. And Friday, we got to close again right at the August lows, and we're within a striking distance of the September lows. So this is something I'm going to be watching carefully. If price can work lower on the financials and we get down here, test this level, and it breaks, and we have IYT, XLF, and the small caps all selling off, if that happened, the S&P 500 is going to be in big trouble of breaching the August lows, and this is a serious concern. We're just going to have to see how price action is handled and what kind of headline risk we get out of Europe over the weekend, and how the market digests some of that headline risk. And there's always going to be surprises every week, so we'll have that to keep an eye on. And then we also will have earnings coming up soon, which are going to have a major impact on the price action. So from where it stands now, financials and IYT as well as the small caps are very, very, we're in a very volatile position, very close to long-term support, that if it breaks, the S&P 500 is likely to go with it. EEM, emerging markets. Emerging markets have really underperformed the S&P. Lots of weakness here recently. Huge sell-off. And basically, EEM closed trading on Friday very near the September lows, and I suspect if those September lows are taken out on EEM, we're going to see the rest of the usual suspects begin to test those lows. EEM has shown extreme weakness with the S&P recently, and I would expect that weakness to continue. But this area right here on 34.65 has to hold. Otherwise, we could see EEM push lower and bring the rest of the usual suspects and the S&P with it over time. So right now, pretty bearish price action we saw on Friday. All of the usual suspects are looking bearish. We're getting close to support levels where we might see some buyers step in, but if those support levels break down, price action is going to get very bearish very quickly. So that's kind of where we're at. Now let's jump to the dollar index futures. Dollar index futures, and we've got kind of some key areas drawn out here. Here's the original resistance line that we were able to penetrate recently, back in the beginning of September, and we came back down, back tested that area, and then we took off, rallied higher, and since I put in a few more clear support levels. Here's support, and then here's our most recent support, and price is kind of in this channel. Huge move higher on Friday. We've got a chance, if price can break out above these recent highs set back on September, let's see what date this was, September 26th. The high on the dollar index futures was 79.645. If that level can get taken out on the daily close of, a couple consecutive daily closes, we could see an extension on the dollar that could run anywhere from $81 to $83 in terms of price. So we could see a huge move on a breakout. If we do get a breakout in the dollar in coming days and weeks, we're going to see pressure put on all risk assets, which includes stocks as well as oil, silver, and possibly even gold as well. So keep that on your radar. The dollar is going to be huge going into October. This is huge. We have to monitor it. We have to keep an eye on it. And that is kind of the gist of where we're at. Right now, the dollar's critical. So we're kind of in no man's land on the chart in this channel. Coming up, if we push higher, we'll be pushing into resistance, and if we see a breakout, Katie bar the door on lower prices on risk assets. Take a look at gold futures. Gold futures have just been plain ugly in the past 2 months. Huge selling pressure. We've got this long-term descending trend line. 200 period moving average, this yellow line's offering support. I'll throw the support, in this recent low. They're right there together. We got price kind of in this little bear flag. Looks like it could, we had a little bit of a push higher Friday, but it didn't push. It couldn't hold the highs. Kind of in no man's land. This thing could come up, test the top of this channel, and then push lower. We could break out to give us another test of this key descending trend line. But it wouldn't shock me to see something like this, where we came up here and then pushed lower, and consequently we could just come up, test this area, and push lower as well. So there's a lot of different ways this could play out, but the point is, right now, if the dollar continues to rally, it's going to put pressure on gold, it's going to put pressure on silver, and the recent price action there is just plain ugly. Silver is similar to gold. We got this huge ugly sell-off. There's been a relative weakness in silver. It hasn't held up as well as gold, been much more volatile, and we can see huge sell-off, came down and put in some new lows recently, and then put in a strong bounce, and now we're back in this little bear flag similar to what we have on gold. And price looks like it could fall back down and come down and test that recent low. Might be a good place to make an entry on a retest that area. Gold the same way when we get a retest of the recent lows, if and when. But right now, I think it's a hero trade, and I think I want to let others do the heavy lifting before I get involved. I would point out that when speaking in general about precious metals, for OTS we have a double calendar spread on that at this point in time is up 20 to 30% based on overall risk. So we like what we're seeing there. We're in very good position coming into Monday, and we should collect some more time decay over the weekend, which should benefit the trade tremendously if price continues to cooperate. So we like what we're seeing there in terms of the service. Next, we'll take a look at oil. Here's oil futures daily chart. This is light sweet crude, and pretty ugly price action on Friday. Big engulfing candle. Got this ugly down. We got this giant bearish wedge, and we got another bearish wedge inside the wedge. Clear support zone is right in this area, right in here. This is clear buyers. If this low gets taken out, we should see oil push as low as 72, 73 in short order, possibly get down as low as $70 a barrel before that selling surge ends. But right now, we're just seeing a lot of bearish price action on Friday. We could see reversals across the board everywhere on Monday, but I would be surprised. Probably see a pretty weak recovery. Pretty weak recovery or a pretty weak retracement of Friday's move. If we get a retracement at all, we could just see more sellers step in on Monday now that the quarter's over. And the window dressing has ended. We'll have earnings that'll be popping up here in the next few weeks that are going to be front and center again, and the guidance is going to be key, so we'll be watching that. But right now, oil, along with the rest of the risk assets looks a little bit troubling, and we're again coming into support. So we have a lot of charts coming into support, um, and from that support, if that area breaks down, we could see fast moves lower. The flip side is we could test that level and then begin to form a base and rally for several weeks from there, if and when we get down to test those support levels across the board in a lot of these risk assets. Next, we're going to take a look at 30-year Treasury futures. Here's the 30-year Treasury futures, huge move higher, rallied up, came all the way up back on September 23rd, got as high as 147, sold off, and now we saw a nice surge Friday, and we're kind of in this trading range for now. Price has been holding around the 20 period. Saw that again the last week, and we're starting to put in a surge higher. Decent volume on the move higher last week on Friday, so wouldn't be shocked at all to see some continuation higher early this week, where I don't know if we'll get back up and test this level, but we will be watching for this resistance level. If and when we get there, the market could signal a double top, and that would be clearly bearish for Treasuries. But for now, it's a little bit presumptuous to know what's going to happen around this level, and we'll be monitoring that closely for the service. But overall, price is still above the 20-period moving average. It's been flirting around the 20-period average and slowly moving higher. And we'll have to see if we continue to see that trend unfold, or if we eventually do get a breakdown. But as it stands now, the 30-year was very bullish on Friday and could see continuation in coming days. 10-year Treasury, we're in a channel. Price is kind of in the middle of that channel. Tested the 20-period Friday, wasn't able to push through it. But price just continues to consolidate near highs, which is a bullish pattern, working off overbought conditions as a function of time rather than price. But if we see a breakout over those highs, would not be shocking to see a breakout over those highs. Treasury yields are going to continue to slide much, much lower. So we'll have to keep that in mind going forward, see how this whole thing plans out and what kind of price action we get throughout the process. But right now, we're still in a price discovery mode. We're still trying to determine what the trend is. Are we going to take out the recent lows and put in lower lows? What does that mean for the market, and where do we go from there? And a lot of those answers I believe we will know a lot more in the next few weeks in October. But the way things are setting up now, we've got a lot of bearish looking charts, got a lot of price action moving into support levels to retest those levels. And if they fail, we could see some serious carnage early on in October, and throughout October for that matter, if this price actually continues to be poor and we don't see the kind of consolidating moves, the kind of rallies from support that would require us to get long. We need to see those support levels hold. Otherwise, we're going to have major problems in terms of risk assets. And there's some warning signals already going off in terms of the charts that I've been through. But right now, we haven't had any clear breaks of August lows. Once that process begins, you can expect it's going to impact the entire market if and when it happens. So with that said, I'm going to go ahead and sign off. This is J.W. Jones with OptionsTradingSignals.com. Hope you have a safe and enjoyable weekend. Shoot me an email if you have any questions. Take care, and I'll talk to you soon.